Good morning, I'm Clinton Griffiths. Cattle prices collapsing last week after a new USDA report raised beef production forecast for next year. Some contracts seeing losses in the $5 to $7 range on Thursday. Ag Day's Michelle Rook has been looking into the big drop. And Michelle, has the run up in cattle ended?
Many market analysts tell me this is still a routine correction in a longer-term bull market driven by record-tight supplies. However, last week's chart meltdown in cattle futures was spurred by massive fund line liquidation and profit-taking, as well as lower cash. And the market has had a huge correction from the record highs hit in mid-September. February live cattle futures hit a contract high of $196.60 on September 19th and corrected more than $23 from the high to the recent low. January feeder cattle hit a contract high of $268.50 on September 15th and also corrected nearly $45. Now, the correction came on a combination of factors. With funds big long in the market, they started liquidating and taking profits due to macroeconomic concerns. But this week's lower cash trade and the bigger numbers indicated in the October cattle on feed report have also played a role.
Finally get your bearish nugget of extra numbers on feed and big placements, due to a lot of reasons. Reason number one, you've got a cow-calf guy that has a lot of money in front of them, and they're interested in selling these calves now because they want to cash in while this market's hot. So big placements last month. We're probably going to get them again on this report.
So there has been chart damage done with key support areas taken out in both live and feeder cattle futures. But the drought-stricken supplies are historically tight, giving market experts optimism that cattle markets may not see much more downside pressure.
Supply fundamentals are pretty clear that numbers are getting tighter. We're going to continue to see strong support across cattle markets. We have had this significant correction. I think that'll play out here, but it doesn't really change the fact that we're getting tighter. And so we'll see strong support for cattle prices through the end of the year and into next year.
The other factor to watch will be beef demand. With the higher prices and the higher U.S. dollar, beef exports are down 14% so far this year versus 2022. And according to USDA data, retail prices for beef just hit $8 a pound, topping the previous record of $7.90 during the pandemic. So those could serve as headwinds for the market moving forward. I'm Michelle Rook reporting for Ag Day.